Hi, Mehdi Sunderji, and welcome to Your Finance TV's Crypto Revolution, where we cover all things crypto and digital assets. And there's always something to talk about in the world of crypto. We're here with Adam Blumberg, co-founder at Interaxis. Adam, how are you? Welcome back.
I'm doing well today, Mehdi. Thanks for having me back. Always something to talk about.
There is always something to talk about. And before we dive into the hot topics du jour, don't forget to like and subscribe. We're climbing through 4,500. I think we're nearing 5,000 subscribers. So thank you very much for subscribing. Stay on top of our content. Like, subscribe, do everything you need to do to make sure you're on top of everything. And also, feel free to drop us a line if you want us to talk about anything in particular. So, Adam, there's definitely been a couple of big headlines floating around this week. I want to pick one up that affects the other side of the pond, my alma mater, I guess. Chase is in the UK has come out and said that they want to block crypto payments, and they're citing more fraud and scams and such. Now, this definitely feels like a scary headline, or it could just be clickbait. I don't know. But it does feel like a scary headline in the fact that, we've discussed in the past how the UK has kind of been trying to position themselves front foot forward into the world of digital assets and a crypto friendly environment for investors. This now feels like a pretty big deal if investors can't invest.
Yeah, it does feel like a big deal. It's a big deal for several reasons, Mehdi. It's one, what I think is the largest bank in the world, Chase, making this kind of unilateral decision for their account holders, saying we're just not going to let you. We're just not going to let you buy crypto. Basically, if you're going to try to get onto an exchange like a Coinbase or Gemini or something and buy crypto, we're just not going to let you do it. We're going to stop the payment from going through. So, of course, look, Chase is a private company. They're well within their rights to do that. I think the problem is, one, why are they doing this? Of course, they said in this letter it's because there's so much fraud and scams in crypto. But you have to think that there's something else going on. You have to think that they're either trying to launch their own token, or they're working hand in hand with various governments trying to launch a central bank digital currency or something. You kind of have to think there's something a little something else going on. The other part, Mehdi, is this goes obviously completely against kind of the ethos of crypto, basically saying it's your money. You can kind of do with it what you want. And this is, big Chase going, we realize that you people are not capable of taking care of your own money. So we're going to do it for you. We're going to make those decisions for you. And, of course, Chase was not immune from the 2008 banking crisis or anything like that. JP Morgan was not. So, you kind of go, well, who are you to tell me what to do with my money? Who are you to kind of censor what I can do with my money? But look, there are banks in the UK that people can move to if they want to purchase crypto, if they want to transact from a crypto perspective. There are other banks they can go to. This is not the UK government doing this. This is one bank, albeit a very large one in the UK, doing this. I think the other worry, Mehdi, is, are they going to bring that over here? Are they going to do that in the US?
Well, that was, let's see how contagious this really is, because if they start bringing it to the US, that obviously has its issues on that side. But also, if other banks start picking up the mantle in the UK as well, it's going to be more and more frustrating for people looking to invest in crypto, or put money into crypto assets. I'm not talking from a speculative perspective necessarily, but to keep changing banks to be able to do so. So, we'll
But you
see
know
if
what,
this
Mehdi?
is a contagion.
It also adds fuel to the kind of crypto and decentralized finance fire to say, look, if you want to get out of this situation where this company, this actually public company, tells you what to do with your money, and get into a situation where you have full sovereignty, the solution's there, right? I mean, the crypto, DeFi, using self-custodied wallets, it's all there. So it's actually kind of helping the narrative a little bit. It hurts in the short term, but in the long term, I think it helps to say this bank basically decided what you can and can't do with your money. And we hear stories all the time, especially about Chase, and maybe I'm more cognizant of those because that's where I bank, but you hear stories about them all the time, just closing people's bank accounts for no really good reason or without giving a reason. And this is another one of those instances where people are going to go, you know what, we're tired of you. And quite honestly, we have the tech that we don't really need you anymore.
Yeah, no, I completely agree. And there have been question marks if they are getting too big in many different ways. Especially after the acquisition of First Republic as well, a lot of question marks popped up just because they are taking the lion's share of the banking world. So yeah, maybe someone needs to give them a little slap at some point. Um, let's I don't want to say this conspiracy theories and such, but while we're on the topic of conspiracy theories, let's have a look at another one that's kind of resurfaced a little bit. There's been chatter about this on and off over the last several years. We're all still looking for the founder of Bitcoin, Satoshi. I- Is it? I can't even say it with a straight face because they're probably listening. Was this an NSA project? All right, now I'm going to get taken away in handcuffs or something. But what do you think, Adam? Do you think there was an NSA angle in this?
I think there was definitely an NSA angle. And I think that angle is, look, the NSA is responsible for so much of the cryptography that we use anyway. And the fact that Bitcoin was based on much of the cryptography that the NSA developed. They developed SHA-256, which is the hashing algorithm that's used for Bitcoin. So yes, there is a whole lot of the NSA on Bitcoin. There are a whole lot of people studying cryptography. And what you're alluding to is a paper that was put out actually by the NSA, right, called How to Make a Man to the Cryptography of Anonymous Electronic Cash. And this is from all the way back in 1996, right? And part of that team, I think, was someone who sounds a lot like the name is very similar to Satoshi Nakamoto. We saw that in that paper. It explains a lot of how you would create a digital currency based on cryptography at the time and based on the internet at the time. Remember, it's 1996, so internet is not as ubiquitous as it is now. But yeah, there's a whole lot of the NSA on it, and I would guess it's more likely that it's not the NSA released Bitcoin. It's more likely someone who worked at the NSA saw what they were doing, maybe read this paper, maybe was a part of creating it, and said, now that I'm not with the NSA anymore, I'm going to go release this pseudonymously because it's too important and the world needs to have it. And maybe 2008 was the time to do that because there was there was one piece missing, and because of the overarching ubiquitousness of the internet, now we have the ability to create this digital money, this digital network. And maybe again, with someone who worked for the NSA, maybe it was just someone who read this paper and said, this, it's time to get this information out there. But again, like the NSA developed most of that cryptography. They some of it was made public. There are a bunch of people talking about it. So of course the NSA has a hand in Bitcoin. Now, whether or not they're Satoshi and have this crazy amount of wealth right now, that I'm not quite sure of. That would be really interesting if the U.S. government was sitting on this like treasure trove of Bitcoin, and at the same time is trying to regulate it.
See, I think that would be amazing if that turned out to be the case. But I think that the source that you're referencing is Tatsuaki Okamoto,
Yeah.
which does sound very similar. So I'm inclined to agree with you. I think it's probably someone that worked there and maybe left and then went off and started doing his own project, and he is Satoshi behind the scenes. But I think that it's a very very cool conspiracy theory, and I hope something comes of it and we do find out more and more about these things.
And you know what, Mehdi? Part of the whole conspiracy theory of it is you look at how many Bitcoin are in the Satoshi wallet, right? Which it's just far and away more than any other wallet, and they've never moved. So part of the conspiracy theory is who else, what person or other entity would be able to have that much wealth and not do anything with it, right? And the answers that you come up with are the government. Well, that's pretty much it. You can't come up with any individual or anyone like that would have that much wealth and never move it around.
Well, and the chances are that one guy in the government probably had his little USB thumb drive and he's lost it.
Yeah, that might be the case. Maybe whoever released it, the NSA got a hold of him.
Yeah, and they can't find that thumb drive. He's sitting in a
They
black
can't find
site
that thumb
somewhere.
drive. Yes, yeah. Part of the government shutdown is because we have an army of people looking through garbage dumps.
In the DC area. Off we go. Oh man, and the theories continue to spawn. So onto something a little bit more tangible, MoneyGram. MoneyGram announced a really cool plan to launch a non-custodial digital wallet. This actually sounds very fluid in the way people will be able to interact, between stable coins into fiat, back and forth, digital currency, and it all just seems like smoothening that experience for customers. Talk us through this, Adam.
Yeah, it's interesting. Look, remittances have been one of the major use cases we've talked about for crypto, whether it's Bitcoin or USDC or anything. It's if I can send money to my family or my friends or wherever elsewhere in the world, remittances are a monster market that has huge fees attached to it, that has a lot of friction attached to it. And crypto seems to fit there perfectly. And so now it's Western Union MoneyGram, Western Union being the two big companies that do remittances. But now it's MoneyGram saying, all right, we might be, teched out of existence, right? This crypto might take over what we do. So we might as well play along. Same thing we've seen from Visa, PayPal, Shopify in recent months is we see where this is going and we would rather play along with it and figure out how to make it work for us rather than dig our heels in and pretend it's not going to happen. The interesting part, Mehdi, is it's not like MoneyGram just said, we're going to allow crypto transfers. They said, no, we're going to create our own digital wallet and we're going to allow our users to have their own wallet. By the way, it's on the Stellar blockchain. So it's not on Bitcoin or ETH or Solana or any of the ones we usually talk about. It's on Stellar. And Stellar for years has really been trying to work, on things like central bank digital currencies and international money transfers. They've been really focused on that. You haven't heard a lot of decentralized finance or NFTs or anything on Stellar because they're really focused on, kind of payments and moving money around the world. So MoneyGram interestingly built or is building this wallet such that users are likely able to transact on the Stellar blockchain using the MoneyGram wallet. And I'm sure there's going to be some sort of fees associated with that. But I believe, one, it's their way to say, we see that this is a problem coming and we're heading it off before it becomes more of a problem, before we have to just lower our fees and lower our fees and lower our fees. We might as well invest in the tech now. And probably at some point, sending money via MoneyGram is going to be not a whole lot different than sending it by any other crypto wallet.
Listen, you've got to stay relevant to, you've got to be involved in the new technology to stay relevant. So, good for MoneyGram, and they are at least simplifying that process for their customers. So, good for them. And that's we got another positive. Let's have a look at negatives, right? So, this is nothing new, but there's more and more chatter about Gary Gensler and how wrong he is about proof of stake tokens. The fact that expecting a return from staking is what's effectively classifying this as a security. Right. And Gensler has been under scrutiny by a lot of people. This podcasty video cast is included. Let's have an update, Adam, I guess is all I can say. What are your thoughts on this at the moment? Because it's the same conversation.
Yeah, it's the same conversation over and over again. It's him, staunchly saying everything except Bitcoin is a security, continuing to call them digital asset securities or crypto asset securities, even though a judge in a case basically said this is not a security. So one of the articles that you're referring to is basically stating just because you can earn a yield from it, just because you can earn a return, doesn't make it a security. And we could look at things like, look, I can collect art, I can collect shoes, I can collect watches, and I hope they go up in value. That doesn't make them a security, right? I'm hoping for some sort of return on that. That doesn't make it a security. It doesn't necessarily make it an investment contract. And furthermore, in relation to Ethereum or ETH in particular, I might be staking my ETH because that's how you earn interest, of course, or earn yield. I might be staking my ETH because I'm concerned about the security of the network. That's what the ETH is really doing. The fact that I earn a yield from that, I earn ETH from that, is part of the incentive to get me to help secure the network. So it's not like I own it and just earn a yield just because. It's actually doing something. I'm putting some of it at risk as well. But further to, again, Gary Gensler especially, not the SEC overall, but especially Gary Gensler saying everything except for Bitcoin is security. Now, in all the kind of issues he's having with trying to regulate crypto, now what we're seeing is the House, I think 4 members of the House Financial Services Committee, where he's actually testifying as you and I talk, have basically sent him a letter saying, you need to approve a spot ETF. You haven't given good reasons as to why you're not. A judge basically told you the reasons you had been given for years are not valid. So approve it so we can all move on. It's not worth all the political capital that it's taking for us to argue this. Just approve it. Right. That's basically the letter. Again, he's testifying in front of the Financial Services Committee now. So we'll see what actually happens. As part of that as well, I don't know if you saw this, Mehdi, but the SEC already came out weeks ahead of time and said, don't even ask us. We're not commenting on the ARK Bitcoin spot ETF until January. That's our 240-day deadline. That's the end of it. When it comes up whenever in October and November, we're going to delay it. Just know that now. They've already said they're delaying it.
Well, at least we've got no more tender hooks every time these deadlines come up. So, we'll chat next year.
Right, exactly. So what they're saying is don't expect it this year. I know a lot of people have said maybe we get one by the end of the year, and the SEC has emphatically said, no, you won't.
I feel like investors quite often just want to hear what they want to hear, and they block out what's really being told to them. And I think this is the case with what the SEC is saying, and in the broader market, what the Fed has been saying about rates and such. Everyone's sitting saying, no, they're going to cut. They're not going to cut. But that's a whole other conversation, another ball of wax, but we won't get into that. Speaking of balls of wax, Adam, NFTs. I don't know how that connects, but why not?
You're the master of the segue, Mehdi.
I don't know what happened there. NFTs, they seem to have been in and out of favor over the last couple of years. Even on this show, I've been in, I've been out. You've been consistently staunch on educating me on NFTs, but NFTs, I guess in 2021, I think it was August, they peaked at 2.8 billion in monthly trading volume, which is quite the number. 2 years later, August of 2023, that was around $18 million. So, it's a cheeky 3% of what it was at its peak. There are some 73,000 plus NFTs out there. And 95% of them are deemed worthless. Are NFTs over, Adam?
Oh, absolutely not. I think the era of people creating NFT projects in hopes that they're going to mint 10,000 of them and everyone's going to, throw their money in and I'm going to raise $2-3 million by issuing NFTs, that is quite over. And quite honestly, it got way too overheated. When you say 95% of NFT of those 70 something thousand NFT projects have no value, I would say 95% of them should have never had value, right? There was no plan to have value. It was just people going, I can't do anything else with my life. I don't have any other jobs. I'm going to launch an NFT project because it's hot right now and raise some money. And that time is definitely over. Just like the year before when we had DeFi and everyone could just, create a project, launch a token and bam, be millionaires. That's over as well, right? It got way overheated. The fact that we can do all this digitally, it's international, it gets more people involved more quickly. But NFTs, the technology, non-fungible tokens, whether you're talking about it to represent digital art or you're talking about it to represent collectibles, or non-fungible tokens that could represent assets like my house. The technology, as I keep saying over and over and over again, the technology is the important part. The fact that we can verifiably know that I have this one of one NFT or I have this one of 10,000 NFT. That's the real important part. The ability to track assets using public blockchain technology is the real important part. The fact that so much money went in and so much money has been lost, that's just part of the innovation cycle.
Well, one positive that has been coming out recently, and I feel like one myself, but Pudgy Penguins, they seem to be making a mark for themselves, and they've kind of partnered up with Walmart, which seems to be having some distribution side within their 2,000 plus stores. So talk us through how Pudgy Penguins is doing this and why they're succeeding versus some of the other fails in the NFT universe.
So Pudgy Penguins, what they're doing, they're releasing toys and stuffies and stuff through Walmart, based on the Pudgy Penguins line of NFTs. And this is one of those situations where we see what the technology can do, and we see what smart people can do with this technology. And they're basically saying, as a Pudgy Penguins NFT holder, you get to participate in some of the royalties, you get to participate in some of the governance as to what we do. And that's being borne out by the fact that they decided to, again, create these toys. It might be at some point collectibles, but I'm going to be able to potentially do things like link a toy I buy in the store to a non-fungible token to prove that maybe this is the only one, or maybe I can name it. And now it has some sort of attribution to it, that what I purchase in the store matches what is on a public blockchain. So this is the I don't know, project, organization, company, Pudgy Penguins, basically taking the idea that I can verifiably track these assets and going, how are we going to, build a viable business out of this? What interesting parts can come of this besides just bringing, people's money and figure out what to do with it? It's okay. We can track things like licensing and royalties. We can track governance. We can track the actual the ownership of an asset. And so this is what they're doing. This is what they're using non-fungible technology for. And I think that's, it's really interesting, Mehdi. We've talked about it with Bored Apes and with CryptoPunks and some of these others, that at some point it's going to be somewhat similar to way back in what, 30s or 40s. If you could own a piece of Mickey Mouse or Minnie Mouse or Donald Duck or one of those, or if you could own some of the Avengers or something, that every time they got used in a comic book, every time there was a toy sold, every time there was a movie, you got to participate in that. That's what we're seeing the team at Pudgy Penguins doing here. And interestingly enough, that they got Walmart involved to actually, as you said, be distribution and carry some of these toys.
It's definitely a scalable item, and they're doing well on their distribution side. So good for the Pudgy Penguins. Adam, as always, thank you so much for sharing your thoughts and time.
Oh, great to be here, Mehdi. Thanks for having me.
And anyone watching, if you want to learn how to go and purchase a Pudgy Penguin NFT, you better get yourself educated. So go check out Adam's course on digital assets and crypto education. It's interaxis.io. You can see it right down there. Until next time, thank you for watching and good luck investing.